Welcome to Money Talk with Michael. I'm Michael Eastham, president of Fellowship Financial Group. Money Talk with Michael is our weekly broadcast where we answer your questions about finance, investment, retirement, and all things related to money. Remember to send in your questions to the email listed in the description box below, and you might hear your question answered on the next Money Talk with Michael.
I want to keep some money in the stock market even after I retire. How can I invest for income in the stock market, and when do I make the switch to investing for income?
Well, the simple answer to your question is generally around 10 years before you plan to retire. And the good news is that you can be in the stock market and still invest for the I or for income. How do you do that? Well, all you need to do is invest in certain dividend-paying stocks if you're in the stock market. And that sounds pretty simple, right? Well, it might be simple, but it's not easy. And here's why. Most people think that investing for income, all you have to do is find some high dividend-paying stocks and that it's easier than investing for growth. Well, in reality, the opposite is true for a couple of reasons. Investing for growth, all you need to do is kind of look for some momentum. And that's not too difficult. I mean, it could be in some technology stocks when the sector is going really hot and you find a couple companies that are doing well. And then you can put stop losses on to protect your downside a little bit. But when you're investing for income, investing for interest and dividends and predictable income, it's more difficult in the stock market because you're typically buying more mature companies. And these more mature companies can be either at the beginning stage of that maturity or at the ending stage in that maturity. If you're able to buy them at the beginning, that's great because you can get good dividends and some growth over time. If you're at the end of that stage, then the price might start to come down and the companies might not be as strong as a result. They start to cut their dividends, which if you're retired, you don't want them to do that because you rely on that income. That's why you need to make sure that when you are making that shift or that transition from growth to income, that you work with an income specialist in order to make sure that if you're staying in the stock market with some portion of your money, when you're retired or you're close to retirement, then you want to make sure that you're investing in things that are going to pay consistent and predictable income because it can be much more difficult than investing for growth. I hope that helps, but certainly reach out to us and I'll be happy to point you in the right direction. Thanks so much for watching. Tune in next Monday for another edition of Money Talk with Michael. And don't forget to send in your questions and check out our website at fellowshipfinancial.com and our social media platforms. And if you'd like, you can schedule a 15-minute complimentary call to get your specific questions answered. Everything you need is listed in the description box below.